In this lesson, how to trade the rounding bottom pattern, the learning objectives are: you should understand how the rounding bottom pattern forms, and you should know how to properly enter a trade using the rounding bottom pattern. The rounding bottom pattern forms at the end of a long downward trend, with the rate of the decline slowing down before the formation of this pattern. This pattern indicates a change in sentiment by traders from bearish to bullish. Although the pattern has a high success rate, it is significantly rarer than other chart patterns. This chart pattern could be found on any time frame. The one thing that each time frame has in common is that the formation takes a lot of time to complete. So you'll see a lot of these candlesticks before it fully completes. As always, you can draw a neckline for this chart pattern. A good entry point is entering when the price breaks the neckline. To draw the neckline, you draw a horizontal line across the top of the bearish and bullish sides of the rounding bottom pattern. Here is a real world example. This helps you identify when the breakout has occurred. A good profit target should be double the size of the rounding bottom formation, as you can see on this real world example. To measure the potential of your rounding bottom, you should first identify the neckline of the pattern, then take the distance between the neckline and the lowest point of the pattern, and then use this to find your minimum profit target. Although the rounding bottom pattern is very reliable, there are no exceptions to the rule of protecting your capital. That's why you should also have a stop loss. After all, nothing is 100% when trading. An aggressive approach is to place your stop loss in the midpoint of this pattern. A more conservative approach would be to place the stop loss below the low of the breakout candle after a breakout, because this would mean that if price then goes below the neckline, this would invalidate the pattern. But due to price fluctuations, this could happen before going in your desired direction. So that's why I would suggest for this pattern, due to its reliability, you allow yourself to have a wider stop loss, as you can see on the chart.